Hi everyone. Hi, this is Ankur, your host today, moderator for today. Let's just wait for another minute or two for more people to join in, and we're also checking with today's speaker, Rishabh, if he should be coming in any moment now. So we will start in about a minute or two. Thank you. Hi, so Rishabh will join us momentarily. He's running a little late. Today's speaker. That should give us good time for other people to join in as well. Hi. So while we wait for Rishabh to join in, um, just want to check. So how has the journey been for all of you all so far? And would anyone like to speak about what they've learned or what they've liked or what they've not liked in the program so far? You can raise your hand and we can unmute you, or you can.
Hello, this is Luki. Can you hear me?
Yes, Luki. Hi. How are you doing?
I'm doing well. How are you?
Very well, thank you.
I've been really enjoying this journey. My cohort, especially study session, has been really helpful. Especially the leader Anya, she has been so great and provided a lot of feedback and comments. She and the whole group, David as well, everyone makes the whole study session feel very supportive, and we share comments and feedback, and we share our knowledge base. So yeah, it's been really good journey.
Awesome. And what brings you to learn about blockchain and Web3, and what do you find most exciting about this space?
Um, I I just first I love the concept of the technology. And I love how inclusive everyone is. The technology aside, I just love how supportive everyone is regarding the whole industry. Learning more and more about it. There's so much going on. There's so much to learn. Every day there's something new, and there's every day there's some controversial news or stuff going on. But at the same time, we're all very committed in the industry, understand the technology, and hope to make something different. So that's what really makes me excited about this.
absolutely spot on. So great, thank you for that feedback, and glad that you're finding value in the journey so far, and we hope to continue adding more value. And like we run like 6 cohorts a year, so feel free to come back for the next one. The next one is scheduled for November 20th. So everyone's welcome to join back if you find that, like in doing it again would help your understanding in a better way, in a deeper way, because if you're listening to these concepts for the first time, it can get a little overwhelming. So yeah, you're welcome to join back again and deepen your knowledge and understanding.
Yeah, I just want to piggyback on that because there's so much to learn. I took some courses and joined some classes, thought I had a grasp of the technology, and then after joining Unit Masters, and I was like, oh, actually, there are still other things that there's so much involved. So it's really hard to have the comprehensive knowledge and knowing every detail. So coming back for sure, so that we can actually have a little more knowledge and more details since everything's evolving all the time.
Absolutely. In fact, I was a graduate of Unit Masters myself. I did 2 cohorts. The first one, metaverse, was not even a word, right? We had not even heard about a metaverse, and then the following cohort, we had one whole session on metaverse alone. So, as Unit Masters, we also strive to. Uh, just a second, I'm getting a call from Rishabh. Just let me. Sorry, that was Rishabh. He was finding it a little difficult to find the link. He's just joining in. Sorry for the delay, guys. Yeah, Tisha, exactly. So I think the registration should be open on the website as well. If not today, it'll be opened up by tomorrow. So please feel free to come and join back. We have Rishabh. Welcome, Rishabh. To
Hi, and please accept my apologies for being late. Uh, I had an emergency meeting which got a little extended, but uh, glad to be here. And thank you again, Unit Masters, for inviting me. And thank
absolutely
you,
no
Ankur.
no problem at all. And we just used the time to like have a little conversation with the group, and that allowed a little more participants to join in. So so great. Without wasting any more time, I would like to get started. Would like to make a quick brief introduction. Everyone's in for a treat today. Rishabh is a great, apart from being a great guy, Rishabh is, like the director of operations and mentor for token economics at TDeFi. He comes with 4 years plus experience in crypto markets, where he's worked with 50 plus startups to help them with designing sustainable token economics, which is also like, like a backbone for any Web3 or crypto project for success, and building partnerships across the industry. He has previously worked with startups from the DeFi, Metaverse, infrastructure space in blockchain. Rishabh has completed his MBA from Industrial and Management Engineering in one of India's leading universities called IIT Kanpur, and is a CFA level 3 candidate, CFA Institute USA. He delivered sessions on Web3 technology at multiple institutions as a part of his mission to bring Web3 adoption and financial literacy. He has built strong background in optimizing process operations, financial modeling, scaling, and managing diverse startup teams. Rishabh's also leading BizThon, which is one of the leading hackathons in the space, which have what 35,000 entries this time, Rishabh, with a
Yeah, 35,000 entries, but 15,000 ideas, and total 5 winners have emerged out of Besthon. We concluded
amazing.
the hackathon just last month, this month itself.
That's
Yeah.
that. Yeah, thank you for that. Yeah, exactly. And I think there's a price pool of 1 million, up to $1 million in funding, and 6 months of incubation and acceleration through Biscoin. So, without taking any more time, over to you, Rishabh. Thank you for
Thank you.
taking the time out.
Thank you
And
so much.
yeah,
Yeah. Thank you so much, Ankur, and glad to be here again. Last time I had a great session with all the Unit Master students. As we say, the learning never stops, and there's one thing that never changes in our life, and that's learning. We keep on learning, we keep on evolving, and so has Web3 as an industry, as an ecosystem. From Bitcoin, just Bitcoin in 2010 to what we see Web3 today. When corporations talk about metaverses, when banks talk about DeFi, when artists, creators talks about NFTs, that's where we have reached. And I think this is just a beginning. So there's a long way to go, and we all should be proud of one thing we all have in common, and that is that we have taken that first step, that first important step towards building this new economy. I'm an avid reader of a lot of philosophers around the world, and one of those philosophers and scientists and researchers, Lao Tzu, has said, "A journey of 1,000 miles starts with a single step." And I think this one step of you joining the Unit Masters program has is that one step for your journey of those miles and success you're going to achieve. I would humbly request every one of you to please be on camera, switch on your camera. It gives me more, a connectivity between you and us. It connects the vibes. It's not just two people talking to a screen. It's about people talking to people, right? Thank you so much, Olivia. Thank you, Anil. Thank you, Henry. Uh, I'll try to take more as many names as possible, but great. Thank you so much again. So let's begin. Let's begin with a good energy. Let's take a deep breath and let's get into and dive into this topic, which still, by the way, is unexplored. If you type Google search and you see the Google search keyboard dashboard, you would see just few thousand searches of token economics. That's how uncommon the topic is today. And can you believe that this topic itself, just token economics, is the foundation for the entire Web3 economy? And I'll tell you why. Right, let's go back to our childhood days. All of us are, I'm assuming 18 plus, so we are 90s and early 2000 kids. So we you remember when you go to a bank, there was this one person sitting who would approve your transaction, saying, why you want to transact 100 currency, 100 denomination from one person to the other. So he'll say, he or she'll say, okay, you have this credit score. Okay, let me do this for you. And by the way, I'm going to charge a fee for doing this. What this was happening because there was just one person approving or disapproving, and the fee they were charging were going to incentivize that one person, that one institution, for doing all of these transactions. Then what is Web3? Web3 said, wait, guys, let's change the status quo. Enough of one person, one institution governing everything. Now is the time when we become the creators, become the incentive earners, and we all as a community starts developing our community. So we become the creators and we become the earners, right? From I, it became we. And that is what a Web3 economy is. Very simple, right? And what is token economics? Token economics is just the modeling, or I would, in simple words, token economics means how to incentivize all of us as creators to keep us participating in this development. Like, for example, if today I go to, I don't know how many of you know about Unit network as a layer, as an infrastructure. But let's take an example of a blockchain infrastructure. There is a transaction that is happening. And who can approve that transaction? Anyone who has a skin in the game. And when they approve that transaction, they earn some rewards. How many rewards they should earn? that depends on the token economics, right? So this is what token economics is in very simple language. It is nothing but an incentivization structure, a structure to an economy that incentivizes every participant to be honest in that ecosystem. So essentially, there is no point where a single person or an institution can fail the whole ecosystem or can fail the system. There is no one bank that would say, you know what, I'll do whatever I want from your money. Because now there is no one bank. We are as a bank. There is a technology, and that technology is being governed by all of us. Let's take example. And we are so fortunate today that we are living in the times when Web3 has already solved and has already proven its history and its existence. Just like I said, when you go to a bank and say, I want to take a loan, they ask you for a lot of documents. You tell them that I have a house that I'm putting as a collateral. Then why are you doing all of these fee? Why are you charging me such heavy fees and exorbitant fees? And why are you making me run after you? Then they say, because we have the money, so we would do what we want to do. I'm not disrespecting the banks. I'm just trying to tell you that change is the only constant. From decades and decades, we have been living a life where we have been told and conditioned that this is how the economy works. But now, 12 years ago, there was a man or a group, Satoshi, who came and said, no, let's change the way the world lives and the status quo. And now there's a protocol called as compound finance. You all should check it out. It's there is a community. No one knows each other, and they decide, okay, this should be the interest rate of that transaction, of that loan. And how will I get a loan? I simply have to put my collateral against which I get a loan. No paperwork, no running here and there after the bank employees, after the managers. It's just our application that is being approved by a community. And who is the community? The community is the people who believe in the system. And if they fail, and if in case they become dishonest, they are disincentivized, meaning that if they fail, they will lose all they have. So now, if I have to earn and keep myself running, I have to be honest. This is the beauty of Web3, and how this happens is through a structure called as token economics. Right? I'll share my screen now to give more visual graphics to my conversation. Here. Before I begin, let me talk about myself as well. I mean, my company as well. TDeFi is a crypto incubator. We have been incubating projects, crypto startups. We invest and we incubate in the startups that are working in the field of Web3 technology. It's been 2.5 years and 8 years of investments and 2.5 years of incubation with a portfolio of over 50 companies. We have been working with metaverses, DeFi, NFT. We help projects in their structuring the token economics. We have investment advisory company that would help you in developing your research thought process about crypto and about blockchain. You can go and check out this company called as TradeDog.io. You will find a lot of research content for yourself. And again, before I begin and delve into, thank you, Unit Masters, for hosting and putting this together. A lot of people are trying to bring adoption, but I believe very strongly that without education, there is no adoption. There is no possible adoption. And all power to you, more, Godspeed to you for bringing this together and bringing these 33 people together, 39 people together to make them aware and understand and educate about how Web3 works. And I think this is where the revolution begins. So again, big all hands down to you. Before I get into the topic, I would like to understand how far till today, till this moment, how has the session been for you? If you could just write one word in the chat box, that would give me the sentiment and the vibes. If you like it, just say I'm good. If you don't like it, say I am expecting more. Anything. Great. Thank you. Wonderful, informative, great, cool, amazing. Thank you so much, guys and gentlemen and ladies, for your wonderful feedback. Let's move. Understanding token economics. And in short, it's also called tokenomics. What is a token? A token is a currency or a way of transacting in a decentralized economy, right? Let's take an example. I'll take an example as much as possible. I can see 5 people on screen in my Zoom. These 5 people today decides that they are going to run Unit Masters. And what is Unit Masters? Unit Masters is an education platform. So let's say now but you decide that there will be no one single person that would be a teacher, and there would be no one single person that can be a learner. Anyone can be a learner, anyone can be a student, anyone can be a teacher, anyone can be an educator. So what does that mean? So for example, if Ankur says, I want to share my content on Unit Masters, and this is a hypothetical example. If Ankur says that I want to share my content on Unit Masters, now Ankur should be rewarded. Who should reward them? Who should reward him for his content? And then Olivia says that I want to learn from Ankur. So now Olivia comes on in the economy, in the ecosystem, and says, I want to pay I'll pay $5 for this course. Taking an example, right? Now this $5 goes on the platform and goes to Ankur as a currency. No one now. Today Anil comes and say, I want to do this and I want to also educate students, but the content he's making is on a different topic. So he comes in and says, and then someone from Sybil, that's Frank. Let's take example of Frank. Now Frank says, I'll pay $3 for this course. Who is deciding the fee? No one but the educate learners themselves. Who is asking for the fee? No one else but the educators. Now there is no one governing authority. All 5 or 6 of you becomes the participants of this economy. And the way this currency is being transacted is what you call as token. Instead of dollars, it will be 5 tokens or 3 tokens because of the value that course brings in. Now, when I come and let's say I come on the platform and I talk some bullshit on the platform, and you don't like it. So you would say, hey, I don't like this. We don't like the whole economy. 3 out of 5 people vote that we don't want this teacher or educator. So what would you do is say no incentives for you. And hence, even if I know the founder of Unit Masters, I am not being incentivized because my course content was not good enough for you. That's the beauty of a Web3 economy. And the token is the way we were being incentivized for our participation and we were paying for our learning and our value is our token. And since it is moving on blockchain, it is secured. Now the course I'm producing is validated on blockchain. I cannot go and change the content of the course. I cannot go and change and play with the system, the blockchain as a network. This is how a token, this is what a token is. But so a token in very simple word is a digital representation of the movement of value on our blockchain. It's a digital representation. The way when we move towards when a value is being created more, the token appreciates in value. When the value is not being created, the token depreciates in value. So the more value a system creates, the more value the token gets and the more valuable it becomes. This is what a simpler token is, right? Any questions up till now? Okay. Please feel free to keep on writing the questions in the chat box. I'll take them whenever it pops up. Okay, let's move to the next topic. There are multiple type of tokens. I'm covering a very basic infrastructure today. This is not really a deep delving. Obviously, it needs a lot of time and a lot of a previous understanding. But with the kind of work Unit Masters is doing, I'm sure we'll do more deep diving sessions with them as well on token economics. There are layer 1 tokens, there are layer utility tokens, and there are security tokens. Then there are NFTs, there are DeFi. You have all heard these terms, right? NFT. Show of hands if you have heard these terms. DeFi, NFT, Metaverse, utility, security. Yeah. So any token that is governing, for example, when I was putting up my course on the Unit Masters blockchain, that system is moving value from one person to the other. Now, obviously, that system needs power to run. And who will provide that power? There is a fee they will charge, a small fee they will charge. And how will they charge that fee? In their native token, because that chain, that blockchain is also a system and infrastructure. Let's take example of Ethereum. Today, when you let's again take examples. Anil wants to send money on Ethereum to Olivia, right? $100 tokens on this blockchain. Now, the blockchain is being powered. Why it should be powered? Because I come and say, I want to approve this transaction. And how will I approve this transaction? I will check Anil's balance in the wallet, and I'll check whether this recipient is legit, and I'll say, okay, approve. Now, why will I do all of these efforts? Because I want to be incentivized. I want to be a participant in the economy. So I'll charge a fee. And that is why Ethereum charges gas fees. This is what you called as the layer 1 tokens. Then there comes a utility token and a security token. What is a utility token? A utility token is, I'll rather explain a security token. A security token is anything that guarantees returns. For example, today I own this AirPods and I say this is for 200 USD. I want to tokenize it. And this is a unique AirPods, right? This is owned by me, so it's unique. So I say that tomorrow the value of this AirPods is going to increase. And if you want to buy, I am putting it at auction. So all five of you say, I want to buy, I want to take ownership in this AirPod. You will say, okay, I'll pay 50, all each of you pays $40 each, and then you buy this in the form of tokens. Tomorrow, someone else comes and say, I want to buy this for $300. And so the $100 will be distributed as a profit to 5 of you, right? That's what happens with our homes. When we own a house and we tokenize it, we say that 20 different people come together to buy a house. And then the value of that house increases. So I being the owner of the house, say that the value of the house is going to increase tomorrow, so you should buy it. The moment I say this, I am making this as a security token, because now this is a financial security, because I am assuring you some returns. I'm telling you upfront that you are going to earn returns. When I say this, this means that this is a security token, right? Security token has a lot of compliances and regulations around it. Not all the geographies and jurisdictions allow the security tokens. This is because everyone wants to safeguard their investor, their public. Tomorrow, I don't want, as a government, obviously, I don't want to call out governments here. I'm just saying that as a government, I don't want my people to lose money. So what will I do is I'll go and say that no one will guarantee any return to my investors unless you are regulated with me, unless you are reporting everything to me, right? This is what a security token is. And what is a utility token? Utility token is that token is being used for the activities in the network and the community. No one is saying that it's going to give you returns. It can, it may, or it may not, based on how much value it accrues, right? So it is a utility token, because I am not going to tell you and come to you and say, hey, you know what, if you buy if you buy a token today, then you will get returns tomorrow. No, you won't. You are using the token to get incentivized for your participation. So for example, if when I was approving the transaction between Anil and Olivia, I was saying that I will get the fees as my earnings in the form of tokens. But no one was telling me that this token will appreciate in value. Hence, it is a utility token, because now I am giving value and I'm getting value. I'm giving my approval, disapproval, and I'm giving my approval to the transaction, while what I'm getting in return is your value in the form of token. It's a security token. Now, moving on to what is an NFT, right? NFT, for example, I can break this into 5 different components. That is that's fungibility. Or I'll take a better example. I give you a $10 note, $10 bill, and then you come back to me and say, I'll give you 10 bills of $1 each, which means we change the same value in different denominations. So it is a fungible token. But if I come and tell you that I'll give you Eiffel Tower for this amount, now you cannot come back to me and say, I can give you 20 different bricks which will make an Eiffel Tower. That's not possible. Now, this is non-fungibility. When any product or any value cannot be broken down into multiple components equally or equivalently, it is called non-fungibility. That's why you see artists, when as an artist, I create art, I create a drawing, and now that drawing cannot be replicated, not at all possible, unless it's fake. Originally, the kind of amount of paint I used, the amount of brush strokes I used cannot be replicated. Hence, it is non-fungible in nature. And that's why a painting was sold for $69 million as an NFT. That's why you sell images or JPEGs or a jewelry or a fashion design, a designer dress as an NFT, because that dress cannot be replicated, cannot be broken down. If I give you, this is a unique watch, and then you come back tomorrow saying, you know what, I give you a strap separately, I'll give you the dial separately, I'll give you the digit separately. Would that be same in value? No, it's not possible, right? This is called non-fungibility. When you cannot break down an asset into multiple equal components or equivalent components. I hope I've been clear up till now. I know this is a lot of information, but what I'm trying to give you is a very brief idea. So please let me know if I have to stop here and go back to something else.
So, Rishabh, there are a few questions. Would you like to take them now, or would you like to take them at the end of the session? Whatever you.
I'll take it now. So
Okay,
the question is: value of token is created value of a token is created by community. Yes, it's a very simple model. We all know gold is more expensive than silver. Why? Because people want to wear gold as a jewelry, but people don't want to wear. But at the same time, the mines of gold are more expensive. There is more effort that is being put. So based on the demand and supply of a token in a community, the price of the token is governed. If a token is being demanded by a lot of people, whereas the supply is limited, that's why the token value appreciates. If at the same time, that's how you see markets movement in the markets, right? When people say, we don't want this token, whenever government comes and says Bitcoin is banned, immediately people start selling it. Why? Because they think that there is no future of Bitcoin, and hence the demand reduces while the supply increases. So the value depreciates. And tomorrow someone, today Elon Musk bought Twitter and said now Twitter will be linked with NFT marketplaces. What does this mean? This means that a big company, which is $44 billion in valuation, is validating, saying that tokens can be used. So the token value should go up. I'm giving an example. This is not a financial advice. I'm just giving you an example. This is how a community derives a value of a token. How is the token value determined by? Yes, I think who sets the semantic? Initially what happens is there is a team that works on works on creating an ecosystem. They said that there'll be this much supply of the tokens, and then sooner or later the community starts coming in and saying, now you are no more the owners and we all are owners. So now we will decide how much supply will be out or how much demand will be there. So it's a community that decides the supply and demand. Curious to know two aspects in token economics. Which body regulates there is no body for now. There is no one who is regulating it. There are different governments working on their own country domestic level, and then there are blockchain councils. There are different councils that are being formed, but none of them are at this moment approved. Like for example, in Dubai, there is something called as VARA, Virtual Asset Regulatory Authority, that is working on deriving policies for a token. Similarly, there are different jurisdictions and they have different government bodies. Is there a formula or mechanism? No, there is no formula. It's all based on the demand and supply, and that's where token economics modeling comes into the picture. That's where we can have to delve into more conversations where we will derive that, okay, today there are X users, tomorrow there will be X plus 5 users, there'll be X plus 1,000 users. They will be buying this much value of this, they'll be contributing this much value in the system, and hence that value will actually be converted into token price. So you have to model that. It's a financial model that happens, right? We have to get into more details about that. Do
I
you
think
have
just
any other
take
example how we can make? Yeah,
yeah, just take one more question and then you can continue with your session and take the
sure.
remainder at the
Do
end.
you have sure. Do you have any other examples of how we can bring utility to a token? What kind of services can be offered to a community who owns a token? Uh, there is endless possibilities of what kind of services can be offered. I'll take another example. I'll take an example of uh, uh, no, let's take example of a DeFi. Right now, I want to, or maybe let's take example of a metaverse. Everyone is talking about that. Now, I'm a brand that wants to get users in my to buy my products. And I see that there are a lot of users in a metaverse. So what will I do? I'll say, okay, you know what? I want to buy this land in this metaverse. And what will I do is I will put up my shop, a digital shop inside that metaverse. And whenever people will come, they will see the shop and say, okay, I'll stop at this point and I'll look at the branding, I'll look at the products, and then I'll place an order outside the metaverse or inside the metaverse. So what happened is, as a brand, I came and utilized the token to buy a land inside it. Then as a user, you came and you said, I want to enter this shop by paying the entry fee. So you paid an entry fee to me, and then that fee is what I earned as a brand. And then you shopped, and then you were shopping from my product line inside that shop. Right? So this is one other example. There are endless possibilities. What we can do is, if you have more questions, you can first you can either text me on LinkedIn, and I'll try to answer your questions there. Okay, let's move forward. What is token economics? I've already explained this. Why it, how it helps. It creates an incentive infrastructure where we as a community participate, and we are incentivized for participating. Right? This is what token economics is. I've already explained. I don't think it needs more explanation. The process, it's very simple process, but people don't do it. Project owners and founders think that token economics is not important, but let me tell you today, token economics is the most essential part of a Web3 economy. Without a sustainable token economics, your token cannot sustain. Just like what happens in a lot of countries where the value of the currency goes down. Because why? We know what happened with Venezuela. We know what happened with Zimbabwe. We know what happened in a lot of what's happening with right now GBP, Euro. We are seeing what's happening. The demand of the currency, because the economy was built on unsustainability, where the demand of the currency went down, and the price of the pegging of the currency went down so steeply that now countries are into financial crisis. And there is always, because the currencies are being governed by the central banks, so they have the luxury of minting the currency again or taking down the currency from the market, so they will be able to control it. But a token has a fixed supply. You have to fix a supply, you cannot mint more tokens. That's again a beauty. Now you cannot go and say, you know what, today the price is too high, let's mint more tokens. No, you cannot do that. Now coming to what is the process of uh, building the token economics. Number one, first thing you have to do is establish your token utility, which means when you are building a when you're building a business, you have to understand and say, okay, this is the point where participants will participate and will create something. So they should be incentivized. This is a utility, right? This is a point where they will engage with my system. So they should be incentivized. This is another utility. This is a point where they will validate the transactions. So they have to be incentivized. This is another utility. So first of all, you have to list down all the utilities. When you have listed all these utilities, then you have to build your token mechanics, which means you have to build how many tokens will be used at what point in time. Based on how many users are there, this is all projections, and then you have to take a standard deviation and variance in the number of users. And then based on that, you have to build the mechanics of how many tokens will be used. Based on that, you will be able to make a distribution schedule that in month one, these many tokens will be out. In the next week, there'll be tokens, how many tokens will be out. And that is how you end up building a token economics. Now, it looks easy, and it is easy. But the only thing you have to understand is that the token economics is built on a financial model, right? Key areas to focus. Number one, incentive design. You have to make sure that all the participants of your ecosystem are incentivized for their efforts. Only then they would continue building honest efforts. Otherwise, they will lose their interest and they will not contribute more. Similarly, there has to be a virtuous cycle. Virtuous cycle means you cannot reward users for free money. It's not like I come today and say, okay, give you free money to use the token. You will have to contribute and add value, and only then there should be reward mechanism. That's called virtuous cycle when your token supply and demand is managed in a way that there is value adding to the system. Otherwise, it becomes a bankrupt system. Circulating supply. It means that at any point in time, you should know that what percentage of tokens are out in the market, what is the value that is being in that ecosystem, and how many tokens are out in the market means what is the circulating supply. It means how many tokens are out in this market at any point in time and how many of them are logged in a smart contract. And based on that, you would know the value. So you would know that what should be a fundamental price of the token. So you should focus on circulating supply. Governance. As I said in the very beginning of my session, that there is no single authority that governs. There is a group of people that govern. There's a community that governs. So what that community is called governance. Now, why would I govern you? Only when you are incentivizing me for governing. Only if you are incentivizing me for my honest governance, I should govern you. And that's how you end up having a token distribution. Token distribution means if there are, let's say you're making a game. Now there are gamers, there are developers, there are creators, there are users, and there are participants. Now all of them are incentivized to build a token. Now
So I think Rishabh's facing some technical snag at this point. Let's just uh, yeah. So you can hear Rishabh. Sorry. I can't. Yeah. Uh, I guess he'll just join back. Yeah. There you go.
I'm sorry. So, as I said, in a gaming system, the gamers are the one who are contributing maximum value because they are playing the game. And then there are creators who are creating the game. And then there are brands. So, according to who are the most engaging participants of your system, you should allocate your token supply accordingly. Right? This is what these are the key areas of focus. How do we study? How do we as TDeFi works on token economics? Number one, we first study the business structure of the token, meaning that how was the value being derived? How is the value being accrued in the system? Then we look at the financial feasibility of the business model, which includes that what is the cash flow, what are the income streams, what are the expenses streams, and then based on that we allocate tokens to different participants. Then based on when they would need the token, we derive the vesting schedule, the velocity, the valuation of the token economy model, and then we simulate that in case this does not happen and there is something else that happens. So now I have to create the best and worst case scenarios for projects, and based on that we allocate tokens to token allocation to them or distribution to them, to these different participants. That was it from my side. I know it's a lot of information, but the whole idea, to sum it up, is a token economics is how your value is accrued or added into a decentralized economy, and how different participants are contributing value and in return receiving rewards, incentivized for or earning rewards for participating in that. This is what token economics is. Thank you so much, Ankur. I'll take
Thank,
questions.
amazing. Thank you, Rishabh. We have thank you for that informative session. I'm sure that there's a lot more. This is just the tip of the iceberg that we could cover. So, please ask your questions, dig deeper. So, I have one question, and there are a lot of good questions in the chat which we can take up as well. Rishabh, can you share some light on an example of a tokenomics which could pass on as Ponzi-nomics, right? Like an example of a good tokenomic structure versus a tokenomics which is more like a Ponzi. So could you just just touch up upon
Sure,
these like different
sure,
aspects and the key
sure.
component when you're doing your research for a project as well?
Yeah. So let's look at compound, right? Or let's I can talk about multiple projects, right? But I'll talk about the oldest ones first. The one where, for example, in compound finance, what happens is when they are different people who are a part of governance, and when they are put asked to put a vote on what should be the interest rate. Now, how do they determine the interest rate? They determine the interest rate by studying the dynamics of the markets, and then they vote on that. When they vote on this and the community votes on this, they are incentivized. How do they do that? They stake some tokens in the system and then they vote, because now their skin is in the game. So if I decide, hello,
We can hear you, Rishabh.
one second,
Rishabh,
hello,
we can hear you, Rishabh.
okay. So I think I ran out of battery in the AirPods. So when they are staking, so which means they are saying that if I fail to be honest, you can take away my tokens and you can burn them, or you would do whatever you distribute to the community. This is a sustainable token economics. I am putting my skin in the game, based on which I am deciding the fate of a company. And if I am wrong, then I am being penalized. But then at the same time, and let's take another example, there is a GameFi project which says that if you want to play a game, you have to pay a $5 fee in tokens, or you have to pay 5 tokens, right? And tomorrow,
if you achieve this level, then you would be incentivized with one token. If you reach to this level, you will be given more tokens. Now I am earning tokens, but I've already paid the fee. So if there are 100 players who have paid 5 tokens each, so which means I have got 500 tokens. Tomorrow, when I give rewards, I end up giving up 200 rewards or 400 rewards. I still have 100 tokens left, which will be the which will go to the governance of the game. But there are some Ponzi schemes where you say, if you just join this, you will get tokens. When you do this, essentially what you are doing is you are saying that even if you don't add value, you will be given money. And believe me, there is a baseline you should all make in your life. There is nothing called as free money in life. There's nothing called as free money. Whenever there is free money, which means that this means there is something shady thing happening. Don't take it or study it more deeper. I would rather say study it in more deeper way, that whether this has some business feasibility or not. You know, we all come from sane minds. We all know, we have done our education, so we know that there is nothing called as free money. I think that explains the difference between Ponzonomics and good token economics.
Great, thank you. There's a question from Mikhailu Nadro. He'd like more explanation on deflationary and inflationary token models.
So deflationary token model or inflationary token model means when the supply in the market is being increased, it's called inflationary. It's been decreased, it's called deflationary. For example, there are some token economics which says that all the fees that I am earning to run this governance or run this product, I will use that to buy back tokens from the market and burn them. So which means I'm creating I'm extracting the tokens and I'm removing it from the supply. So it's called deflationary token supply. But when I say that I will, as and when there is more engagement happening, I will give out more tokens in the market. So it is called as inflationary supply. Right? For example, Ethereum has an inflationary supply, whereas Binance has a deflationary supply.
Although Ethereum is trying to change that with
yeah,
they're
not trying to change this. Yes.
Just taking a couple of more questions. It's okay, so what is the money raised from ICOs used for?
That's the money raised from ICOs should be, I would not say that it is used for, it should be used for building a product, building that product, and so that that can add value and offer value to its users. If it's not being, but although, 95% of the projects don't use the money for good use cases. They actually use it for buying a Ferrari or buying a business class ticket to multiple events. But that's the kind of, let's say, startup world we are in. That's why there has to be companies like, you should check out this company called as CR Square. They are they're bringing an end to this. Now you cannot, they're trying to build a business model where you cannot get money free. You cannot get raise money like that. You have to achieve certain milestones, and then only you will get the money from investors. It's called as CR Square. Yeah, CR Square Finance. Are there books on token economics? Oh, the token economics as a concept is so new. I haven't read any books, but you will find a lot of blogs. And then you can always follow TradeDog.io to read more about different kind of token economics. Then there is a question on how does tokenization relate to DAOs? DAOs is nothing but decentralized autonomous organizations, which means governance. So when there is no single owner of a protocol, it's called a DAO. It's decentralized, it's autonomous, and it's organization. It's called a DAO. And tokenization relates to them, just like I explained for Compound, that when people, all of them are voting for a decision to happen, that's how a DAO works. Great. So I think if you have more questions, please feel free to, ping me on LinkedIn, and I'll be happy to answer you as much as possible. And then you can definitely read Trade Dog. They put up a lot of articles there. As now, I think when are we moving towards the closure?
Yes, Rishabh, we can.
Okay, great. So as we are moving towards a closure, we at Trade Dog are trying to bring a lot of transparency in this crypto ecosystem. For that same transparency, for example, one other Ponzonomics which I see a lot happening is when you have to go to a launchpad. A launchpad is nothing but a platform where you invest money, right? And then you have to stake one token to buy into the other. Whenever you see any business model in any token economics model, just ask these 3 questions to yourself. Number 1, is there a sustainable business happening in this company? Number 1. Number 2, is this moving towards decentralization, or is it a single owner company? Number 3, when they are incentivizing, are they relying a lot on distributing free money? When you have answer to these 3 questions, you would know whether you invest in the token economics or not. That's it from my side. Thank you so much, ladies and gentlemen. It's a wonderful evening, and it has been an absolute pleasure talking to you.
Thank you, Rishabh. I'm sure the participants thoroughly enjoyed and learned a lot from your session, and thank you for taking the time again. And I'm sure we'll have many more sessions and we'll keep coming back to you for more sessions in the future cohorts. And guys, you're in week 5. You've just completed week 5. Congratulations, and hope everyone's minting your NFTs. You still have time to catch up on the 5 weeks. Please do that and get your certificates as your NFTs. And we head into week 6, which is again very exciting. We're going to deep dive a little bit more on the token economics and token economy that Unit believes and Unit is working towards. And the last demo session would be by me. We'll actually create tokens live and show you how simple it is to create tokens, but then putting the logic behind the tokens is what Rishabh just spoke about, how to put business sense and everything. And if you found value in our program, please do reach out to us, use hashtag Unit Masters. Our Twitter is the Unit Network. So looking forward to see you next week. Thank you, Rishabh. Thank you, everyone. Yeah.
Thank you. Bye-bye.
Bye.